So moving now to equities. So a quick recap lang nung 2020. We started the year at 7743 and we hit the lowest level of 4623. So this was in March 2019. So during that session, we hit the intraday low of 4039 before bouncing to 4623. And during those volatile sessions ng March, circuit breaker was triggered sa PSE. So meaning when the session traded 10% down or the index went down by 10%, magkakaroon ng 15-minute break before then markets would resume trading again. But around March then, PSE shortened trading hours from 3:30 closing. Now it is at 1 p.m. So current hanggang ngayon 1 p.m. pa din. And of course, Metro Manila was placed under Luzon particularly was placed under ECQ starting March 16. And as Anis mentioned, we're still in a perpetual lockdown, and we could be at the least strict version of lockdown, which is MGCQ, by March this year. So Metro Manila mayors have voted to push the capital to a least strict lockdown measure. So I think there's no clear guidelines yet on which industries will further reopen or which how much capacity would improve, but I guess this is a welcome development for the markets. And again, when the government decided to reopen economy, it showed a encouraging rebound. So from 4623, we ended the year 2020 at 7130. So that's a 50% climb. But as of yesterday, we're around 6.9 level. So from the trough of 4.6 to 6.9, that's a 47% recovery. And of course, for this year, driver again would be the procurement of vaccines, the recovery in corporate earnings, and possible fiscal stimulus. But again, we're not like the US who gave dole outs fiscal stimulus checks. So the country or the government isn't really keen on stimulus checks. I think Bayanihan 3 would not. There's still debates on whether Bayanihan 3 would hurdle lower and the Senate, the lower house and the Senate. So again, moving now to year-to-date performance of PSCI. So at current level, we're down 2.5%. And you can see here, most of the markets, our regional peers have posted decent gains from around 3 to 11%. So I think Anis mentioned again that um, institutional funds are coming back to emerging markets, but we have yet to see it here in the Philippine markets. Likely, this could likely be attributed to again the lockdown measures. Foreigners are thinking that we're still in lockdown. Some industries have yet to reopen, but based on our observation, naman, you can see traffic has returned. Foot traffic as well in malls. There are a lot of shoppers again, and some industries are seeing uptick in demand. So yeah, but all in all, we're still down 2.5% year to date. But on a valuation perspective, CPSCI has slowly returning to its mean of around 17 or historical average of around 17 to 18 times. So when we were at around 7.1 to 7.4 level early in January, I think we were hitting around 21 times. So we look expensive during those days, but at 6.9, nasa around 18.8 times, 18.5, 18.9 times. So this could be a good re-entry point for those of you guys who have positioned in equities based on our poll. You like to place your funds in the index. So I think this is a good time to enter the markets again. And with some companies have started to report their fourth quarter 2020 earnings. So makikita natin yung trajectory ng recovery nila on a quarter-on-quarter basis. So again, for the performance of stocks here, or particularly PSCI issues, you can see that losers continue to trounce the gainers. Again, we're seeing mixed picture here. Unlike nung initial lockdown, the only gainers there were the resilient companies such as Globe, Tel, and Pure Gold. Now we're seeing mixed names. We have LTG, a conglomerate, FGen, Power, BPI, Bank, after it reported its full year earnings. So we're not seeing a clear picture yet on which sectors definitely would post a strong recovery this year based on the share price performance. But later on, our sector picks will give you uh, will dive deeper in on on those sectors. Okay, so for value turnover, we're averaging around 11.9 billion pesos per day as of February. So again, while most people are still at home, they have more time in front of their screens. So dumami talaga yung online traders natin, online investors here in the country. But again, the 11.9 billion pesos isn't really driven by mostly retail. Meron ding mga lot of block sale transactions for the past few days. But again, we welcome this development. And particularly, we're seeing at least a lot of IPOs this year, mainly from REITs or um, yeah, REITs, and this could translate to higher volume. So if we can sustain this 8 billion daily turnover, this is very good for the markets, noting that we're still on a short-term trading session. However, for the foreign fund flows, we're seeing net foreign selling since January of last year. And as of Feb 15, we are at around 2 billion pesos net foreign selling. Slightly, we're still in the early days of February, so this could go higher pa. But again, any positive development would take foreign funds to come back to markets, to our local equities. So ito yung foreign participation. You can see that from a historical mix of 60-40 in favor of foreign, now they're only about 24%. So again, online traders have online trading activity has gone up for Philippine markets, and a lot of marami tayo ngayong punters yung nag-i-invest sa mga second and third liner of stocks. Kaya masyado mataas yung trading activity. But again, once encouraging development happened in the broader economy, we might see foreigners making up the bulk of the transaction again. Baka bumalik sila pa unti-unti, maybe mag 40% if first quarter GDP would turn out to be better than expected. And of course, earnings of companies have showed better than expected recovery as well.